Hello and welcome to this brief tutorial on the use of TradeHancer, my latest application in the App Store. TradeHancer is a small app designed to help me with my stock and futures trading, and I hope you'll find it useful as well. TradeHancer's basic features are broken up into 4 tabs. As you look at the opening screen, you have a market tab where you can set up the various markets you want to trade in. You have a long and a short tab, and a scoring tab that allows you to score and evaluate your trade based on 6 well-recognized trade quality factors. So let's start with markets. I've set up 4 markets for you, although you can create any that you wish by merely cloning these. Ordinary stock, we see here. The description, you can call market anything you want. You put in your account size for that market and the amount of risk per trade that you wish to limit yourself to for that market. And to help you calculate that, there's a little percentage risk per trade limit bar down here. So for example, with a $100,000 account limit, if you risk 1%, that'd be $1,000. 0.5% would be $500. 1/4% would be $250. 1,000 is considered, or rather 1% is considered a nominal value for many traders. If you're new, you might want to use one of the lower amounts. It just depends on what your risk tolerance is. And of course, you can put any amount you want in there. Your default position size, which in this case is 100 shares. And the tick value and tick size over here. We'll talk about those in just a minute, but basically tick size is the minimum increment of price of whatever it is that you're buying or selling, and the tick value is the equivalent amount in dollars that price change would represent. Down here you have price display precision, which will be 2 places for most things, although when you're in Forex, 4 places is common. I'm not a big Forex trader, so but it's here for those of you that do, or trade things that are priced a bit more finely. And then finally, whatever you've edited here, you can either insert as a new market in the list, or you can update the one that you just selected. We're going to insert here, and you notice that we basically got 2 entries here now for ordinary stock. If I had changed the title description, that would be changed. You can edit these in the usual fashions by using the edit button. In addition, if you want to, you can use these drag handles here and drag to change the order of the items in the list. I'll go ahead and delete the one that I cloned here, which is inserted basically right above the one that you were editing. If we take a look at the NASDAQ E-mini, just to highlight the tick value versus or tick size versus tick value, notice the tick size here is 25 cents. That's because E-mini NASDAQ futures are traded in 25-cent increments. That's the minimum price. And a change, but that 25-cent change in price would result in a $5 change in value up or down, as the case may be, of what that future is worth. So this is where that actually comes into play. Not so much an ordinary stock, but the point is that since most markets use this kind of relationship, you have to know that, and the program has to know that, rather, to calculate risk reward appropriately in dollars. So here you can set up that for your particular market. But let's go back over to ordinary stock and take a look. We're going to go for a long trade here. And let's just say I was a stock that was about a $50 stock, and I was going to enter an entry price of $50. So we'll enter 50 and just tap outside the field here. Notice that it entered that price as dollars. If I'd entered the decimals, it would have of course acknowledge that as well. The interesting point here is that the stop and the target, and I've only selected one target, were pre-calculated. Now where that comes from is your risk value. I've said for this particular account I'm willing to risk $1,000 per trade. So for 100 shares, that means $10 per share risk. So that's where you get the $40 for my stop down here. That would represent, if I stopped out on 100 shares, $1,000 loss. So that's where that stop value comes from. Notice that the first target, however, is set at $80. That's $30 above 50, which is 3 to 1 reward versus the risk. So I'm risking $1,000. I want a reward of $3,000, since to get that for 100 shares I'd need $30 profit per share. The target is set, the first target is set at $80. 3 to 1 risk reward is a generally accepted, or rather reward to risk, I should say, is a generally accepted ratio for being overall profitable. Nobody bats 50%, or it's rare. So typically if you bat 30% or more on your trades, you're doing pretty good. So the idea is to make your winning trades more than compensate for your losing trades. So 3 to 1 or better is a good ratio. Now, you can trade multiple targets as well. So for example, here, if I were to select 2 targets, I'm going to go ahead and clear out the values by hitting this master clear button, which clears out everything except my entry price. And now if I tap outside the screen, notice it's changed the values, and my second target comes into play. Now, I've got 200 shares in play here, so for $1,000 risk, I can only risk $5 per share. So notice that the stop is now $45 instead of $40. And the first target is set at the same distance, the same amount above the entry as the stop is below it. And the reason for that is that if I hit this first target, effectively I have nullified any loss that I might make in the future. If this were to go at least to this level but happen to come back down and stop out, I would break even. And that's a kind of a technique that one of my mentors taught me, and I really like the technique. So that's really why that's set up here. But you can adjust these prices anywhere you want. The second target is set once again to achieve that overall 3 to 1 ratio. So if I make both targets, I will again have $3,000 worth of profit, although I'll be taking it at 2 different target levels. And given my risk of $1,000, that gives me a 3 to 1 reward to risk ratio. Now here's one of the best parts of this particular program, and I haven't seen this in too many other apps. Obviously, these targets are just approximate initial calculations, and you wouldn't want to just take them straight up. You want to look at your charts, and you want to see where it makes sense to put these given target levels. And so you can click on one of these. So let's say I want to adjust my second target here. I can click on that. Now I can edit that just using the normal keyboard functions. But if I don't choose to do that, and if I just scroll outside any of the fields by just touching my finger, notice that I can move. The keyboard disappears, so I have more room to move up and down. And notice it's moving up and down in penny increments. If this were in futures, it would be moving up in tick increments. So, or in NASDAQ E-mini futures, it'd be 25-cent increments. And I'm moving up and down my penny. Well, I'd have to move a lot, do a lot of scrolling to get up and down. So you say, where's the convenience? Well, if you come over here at about the middle of the screen, and the screen is divided roughly into thirds, now it's moving up and down 10 times faster. And if I come over here to the left, it's moving up and down 100 times faster. So just by putting where you put your finger horizontally on the screen, you can adjust the scroll rate. It makes it very easy to scroll up or down to get the price adjustment that you want. And notice each time you take your finger off, it's recalculating all of this down here. So you get a constant update of what your reward to risk ratio is as you adjust your targets, your stops, your entry, whatever it is you want to adjust. You can also adjust the position sizes if you want. You can put the symbol in here. That really does nothing other than just serve as a reference point, because you can turn around and take a screenshot then by clicking this button here, and that'll just go in your camera roll. That effectively documents the trade for you. You've got help on all of this described here, detailed help, just by hitting into these information disclosure buttons. Notice that here on the long screen, they have a light blue colored background. That's because on my platform, the buy or buy to close buttons are in blue, and the sell or sell short buttons are in red. And so on the short screen, it's a light red color. And once you've set your trade, notice that on the short screen your stop is above the entry and your targets are below, and that's again just to help you stay oriented with what you're likely to see on your actual trading software screen as well, so that everything stays in the same order. And this operates the same way, except of course it's calculating in the short direction. You have help for this one as well. But once you've set up your trade the way you want it, or before, if you're thinking about just getting in the trade, you can do this really in any order. You can come over here and you can evaluate that trade from your charts based upon 6 key factors: strength and price movement, reward to risk ratio, big picture trend, retracement, time at zone, and return arrival to zone. And basically you have a 0 to 2 scale for the first 4, and it's a 0 to 1 scale, so you get a half point for these on the last 2 items. And so you have a total possible score, if everything is just ideal, of 10. Anything from 9 to 10 is considered a good trade. Between 7 and 8 is considered something that you might want to use a confirmation entry for, just of some sort, just to make sure that the trade was going in the direction you think it's going to go. And anything below a 7 is generally, on my way of thinking, not a good trade. But again, that's an arbitrary scale. That's just my way of looking at it. The bottom line is it's a 1 to 10 scale. You use it and trade as you're comfortable with it. You may be more lenient than me, and that's fine. You can look at all of the detail for what each one of these things represent, and that's very worthwhile reading. But I document that in detail in the disclosure under each one of these. This is based upon supply and demand zone concepts of trading, which is similar to support and resistance, but there are some key differences. And the school that I went to really emphasizes supply and demand trading, and I'm a believer in that. But if you're a support resistance person, these concepts will still help you as well. So you can rate the trade, and overall the purpose of TradeHancer is to allow you to easily manage your markets, easily set up and do the calculations, the grunt work for your long and your short trades, and also to apply a consistent checklist in evaluating the quality of that trade. These consistency things alone will help you to be a better trader. And if there's even one trade, your very first trade, that you don't make because of perhaps coming up with a poor score here as you check down the checklist, you'll save the price of this app just in the commission that you'll save on that trade. So I wish you good trading. Let me know what you'd like for improvements and enhancements, and we'll do what we can do to bring those about. Safe trading to you.